welcome everybody. SF Live episode 177 this Thursday early afternoon. Markets just closed a few short seconds ago, and we have Discovery Thursday happening right now. Discovery Thursday is a format we are implementing on Thursdays, and we've done a few episodes now where we talk with smaller companies that are either pre-discovery stage, that have been forgotten by the market, or just have a smaller market cap, and we think that they're definitely worth taking a look at. So that's the format of Discovery Thursday. Today we'll be joined by Dale Verran. He's the president and CEO of Fortune Bay Corp, and we'll be talking about their two assets in Saskatchewan and Mexico. And I'm looking forward to hearing from him what his plans are to update the PFS that was released in 2011 already, so 10 years old. Can't rely on it, of course. Input prices, everything's changed. So we're going to talk with him about that, of course, as well. Be reminded, this is an interactive format. So if you have any questions for Dale or for myself that I should ask, make sure to use either the hashtag function AskFOR, that's the company's ticker on the Toronto Stock Exchange, Venture Exchange at that, and or use the YouTube chat as well. And quick reminder, of course, every time, follow us on YouTube, follow us on Twitter. Make sure you hit that little bell notification as well. As we do all our interviews live, you do have a bit of an advantage when that push notification comes up on your screen or within your browser, and you can join us live. You get your questions in as well. So that's it from my end. Enough of that. Let's switch over to our guest. Dale, good to see you again. Thanks for joining us.
Yeah, thanks, Kai. Thanks for having us.
No, it's great to have you on. Like what we do maybe for our audience as well. Like we don't just invite any company. We had a call like about 2 weeks ago where we actually ran through the story together, just the two of us, and touched on a couple points and discussion points. Like, yeah, that's a perfect story for Discovery Thursday. Excited that you could make it. So that works. And why don't we start actually like with a quick introduction, like 30, 60 seconds. Who's Fortune Bay, or what is Fortune Bay?
Yeah. So Fortune Bay is a gold exploration and development company. We trade on the TSX.v under the symbol FOR, and in Frankfurt under the symbol 5QN. We focused on gold. We have ounces in the ground, almost 3 million ounces, and that's across two projects, one in Saskatchewan, which is our flagship asset, and one in Mexico. We only reactivated the company last year, got things moving again, and our initial focus is in Saskatchewan on our Goldfields project, where we currently just completed a new mineral resource estimate and have got a drilling program underway.
Fantastic. Perfect. A lot of things to follow up on, lots of details to jump in. But before we talk projects, though, I always like to start asking about the capital structure so that everybody's on the same level playing field. Run us through that real quick. Of course, everybody can look that up elsewhere. But run us through the cap structure real quick, cash position, and of course, management ownership.
Yeah, so we have around 33 million shares outstanding, so really tightly held. Around 5 million warrants, 2.5 million options. Management's ownership is around 18%, so with strong alignment with our shareholders there. Our market cap is sitting at around 25 million at the moment. Cash-wise, we started this month with 3.7 million Canadian in the bank. We're drilling at the moment, so we're obviously going to draw down on that quite a bit. We expect to spend up to 2 million on our phase 1 drilling program at Goldfields, but we'll still remain well funded through the rest of the year for what we have planned, but we'll probably look for financing perhaps in the summer.
Okay. 18% management and board. How did you get yourself positioned? You said you reactivated the company last year. When did you join the team?
So I came on last year, middle of last year. The company had went through various transactions, which ultimately involved these two assets coming into the company. The company didn't do much with them at the time, just the gold price was in a lull. And when the gold price started picking up, 2019 and certainly into 2020, the board saw opportunity to really get the story moving again. And they went out and looked for a new CEO. I came on board and have since, built the team up. Last year was really putting the right building blocks in place to really get this company moving. And that does take a bit of time and getting familiar with the assets. And this year we're in a position where we can really start to get some traction and momentum in terms of activities and deliver some of the catalysts we had spoken about.
Yeah. So 18% management and board, like you said, you came on, you joined the company just last year. How did you position yourself? Like how many shares do you own personally? And of course, what price did you pay?
Yeah, so we did a financing in earlier last year where I put some money in, acquired about 60,000 shares. And I also bought some shares in our recent financing in December, another 20,000 shares. So I have a relatively small position for, a family man, but I have skin in the game, and that's really what matters. the rest of our board, our executive chairman, he was the previous CEO of the company and its predecessors, Linear Gold and Brigus Gold. So he has a substantial position, as well as some of our other directors, bringing us up to that 18%.
Okay, perfect. And do you know roughly the average cost base for the chairman? Do you roughly know?
I don't know offhand. I mean, it's been over a long period of time. He's obviously put money into the company and funded it through the quieter phases, as well.
Yeah. So before I forget, before we talk projects, let's talk U.S. listing real quick as well. Like, are you listed in the U.S.? I know we have quite a big U.S. audience, of course, as well. We are on YouTube. We're English language, of course, right? Can you run us through that? Are you listed in the U.S.? What are the plans?
No listing in the US at the moment. Obviously, we've had some discussions with the OTC. Certainly an interest to do that at some point, but really want to, get things moving properly first before we look at that as well. We're still in the early stages of getting in results and the company picking up traction. So it's certainly something on the agenda and something we will visit soon.
Okay, perfect. One thing I want to talk about also is motivation for sort of starting this company up again last year. Right, gold price environment obviously changed. Is that the sole motivation, or like why was the asset dormant? And we'll talk details about the asset there.
Yeah, I think it's really a function of gold price. It's also a function of the various transactions the company went through in terms of restructuring it. There were, as I mentioned, a series of transactions with other companies to really get it into a clean format where it has these two good assets, and then a case of timing that with the commodity price. And I think that's worked out, really well.
Yeah. Let's talk about the projects in general. You got gold fields in Saskatchewan, and you have, I don't even dare pronouncing it, Ixhuatan?
That's pretty much it.
Okay, in Chiapas, Mexico. Perfect. I almost butchered
it.
That's right. But let's talk about those. You started recently drilling at Goldfields. Run us through the project. Why did you actually join the company? Like, I think that's a good question. Like, so the projects must have been part of it.
Yeah, so my background, I'm from South Africa originally. I spent 15 years working in exploration and development in Africa across a range of commodities. A lot of that focused on gold. I then moved to Canada about 7 years ago. I joined Denison Mines Corp, the uranium exploration development company in northern Saskatchewan. Worked with them, had some great success. We made 2 high-grade discoveries in northern Saskatchewan and took their main asset through PEA, PFS stages. So, my combination of, a lot of gold experience and then exploration development experience in Saskatchewan really was a good fit and for me moving to the company. And what I really liked about the company is at the time, when I joined, the market cap was only around 10 million. I saw these 2 assets. And what I liked particularly as I'm a geologist, an exploration geologist by background, is I just saw a lot of potential in these assets geologically. There hadn't been a big focus on the models and getting the data into good 3D space to actually advance these things and look for other opportunities. And I just saw a whole lot of opportunity there. So I, jumped in feet first and off we went. And we're in a really exciting position now.
Yeah. Tell us what you saw at Goldfields. Why did it intrigue you?
Well, if you look back at the 2011 PFS, which is the most recent study on the project, and you look at the geology, these 2 deposits and the geological models, you realize there was never much attention paid to understanding these deposits and how they might be part of a bigger mineralizing system. And when I looked at that, I thought, here's a real opportunity to take a project that's been dormant under the radar for a while and make it better. It's all about making it better. And I just see opportunities both on the exploration side and on the, the project development side in terms of the mining opportunities and the processing side, the metallurgy as well.
Okay, so what are you inheriting at Goldfields? You said you saw a 2011 PFS, of course, so there's got to be some data. What are you working with now, and what are the next steps then?
Yeah, there's a substantial legacy of data for that project. It was actually one of the deposits. It's got 2 deposits, the Box and Athona deposits. The Box deposit was actually mined in the 1930s, 1940s. There was a lull in the project. In the 1980s, there was more exploration work, and then the early 2000s. So there's a substantial database. what we have done is we've come in, we've recompiled it, pulled it all together, put it into new models, and it's basically given us a platform to advance upon. Now, part of pulling it all together was to do a new mineral resource estimate, which we completed a few weeks ago, and we announced that. And what's interesting about that resource estimate is when we reconciled it to that previous production, it reconciled to within 1%. So we know we have a robust, reliable estimate and a good foundation on which to advance this project through now exploration and project development stages. And the model, because we paid a lot of attention to modeling the geology, the structural controls, understanding where these veins are and how they're orientated, we now have ability to look for how those higher grades continue at depth, where we believe the deposit not only has open pit potential, which was part of the previous PFS, but we can also look at it from a future underground mining potential once the open pit mining is completed.
So you have about doing the quick math, like 1.1 million ounces, right?
Yeah,
is that correct?
right.
Or just open the press release here just to double check at Goldfields. Where do you see the low-hanging fruit? Where are you going to be drilling now? Like, what's the drill program targeting? And yeah.
Yeah, the exciting thing is, both deposits, Boxer and Athona, they're both open. So the mineralization is not fully closed off. At the Box deposit, which is the bigger of the two, it's about 70% of the resource, slightly higher grade. There at depth, there were some holes drilled. The most recent holes that were drilled in 2011 had some really nice intercepts, 5, 8, up to 18 grams a ton over widths of sort of 5 to 8 meters. So there are some higher grades down there. But the way the drilling was oriented, they could never piece these together in terms of a single vein set. So what we're doing, we're drilling from a different orientation, and we're planning to piece these high-grade intercepts together and step out systematically down depth to prove out what we hope will be a bigger underground and higher grade resource to this deposit.
Yeah, tell us the difference between the 2011 resource estimate, that was the last time you've done one, and now. Like there were quite some changes. Run us through those, and why did you have to make those changes?
Yeah, if you look, for any company familiar with modern modeling methods and best practices, if you look at that previous estimate, it was very simplistic. What you're doing is basically taking gold grade intercepts from a number of holes, you're putting a shell around those without much respect for the geology, and you're letting the software estimate a resource. What we did is we did a geology model first, and then we actually modeled in these vein sets based on all the structural data we had collected last year on site, plus the historical reports, and we were able to define we ended up with a similar amount of gold, but now we know where the gold is exactly and how those veins are oriented. And that was really the fundamental difference for us, is understanding that model more correctly and using that as a platform to move this project forward.
Okay, so you started drilling just recently, actually, or recently it actually feels like 6 weeks ago.
Yeah.
Right? Like, what's the timeline now in terms of releasing results? Like, have the labs given you any indication? Like, how much longer do we have to wait?
Yeah, so we started that drilling program at our other deposit, Athona, because what we wanted to do there is actually drill. It's near the edge of the Lake Athabasca, so we wanted to do a little bit of drilling on the lake itself, off the ice. So we started a few holes there. And then we'll move across to our Box deposit, where the phase 1 drilling program continue. We're looking to drill about 5,000 meters in around about 12 to 15 holes. The assay labs have been quite busy. There's quite a lot of gold exploration in Saskatchewan these days, so we're expecting results over the next few weeks where we're able to make some announcements.
Okay, so a lot of progress at Goldfields. How about in Mexico? What are we looking at there? Like, how much of a second project is that? Is that a main focus, or will you be able to use that project maybe to minimize dilution further on?
Yeah, it's a fantastic asset. You've got a good resource down there as well. You've got almost across the categories 1.7 million ounces in an open pitable target. Lots of potential. What you've got there's this porphyry system at depth, and it's given rise to the Campamento deposit, which is the resource, and numerous other targets which are porphyry, epithermal, skarn type targets. We took a deep dive with our new technical team. We looked at the geology a lot last year and really excited by the potential there. In this current environment with COVID, it's obviously harder to get down there and actually get things moving. In addition, it's in southern Mexico, which does require a good social program to negotiate with the local ejidos to get surface access. That can be done. Our predecessor companies did it. But for the moment, we've decided to focus on goldfields, which is easier to operate, more advanced, and keep Exotan either as a farm out project or perhaps advance it as a pipeline asset for ourselves. And there's certainly, in terms of looking for a suitable partner, there's certainly a lot of interest out there, and it's something that could be on the cards. And as you mentioned, we are watching dilution carefully to take on both these advanced exploration projects at the same time. Probably not the smartest move on behalf of our shareholders. So having Exotan in the hands of a really capable partner could be a good outcome for us, provided that deal makes sense.
Okay. No, that makes sense. And of course, being in Canada, you're flow-through eligible, so you can actually minimize dilution even further because you have those tax credits you can play with, right?
Exactly.
So that makes a lot of sense. Let's talk about company strategy for a second, because I find your mission statement quite interesting. And the company, or I'm trying to find it, the company has a goal of building a mid-tier gold exploration development company through the advancement of its existing projects, which we just talked about, but also the strategic acquisition of new projects. What's the plan there? Run us through that. It sounds like you got your hands full.
We do have our hands full, but we also, we know over time we'd want to create more optionality for our shareholders by bringing in some new good projects. And my background certainly being one of generating projects, through the work I've done in Africa as well as in Canada. So we do see the benefit of actually creating a bit of a pipeline. Once we can get goldfields really moving and some momentum on that, we think there will be benefit to bringing in earlier stage assets where we can use our team's skill set of exploration, of project development to really drive numerous assets up the value curve. But certainly in the near term, our focus is on goldfields, but we are keeping an eye out for other projects, and we have some project generation initiatives underway.
Okay. To follow up on that as well, like the goal is to build a mid-tier gold exploration and development company. And being a development company, of course, requires certain skills, right? So I've looked at your board, and it's quite interesting and that's the cheekiest question I'm going to ask you probably today. But like reading your board description, like everybody has plus 30 years of experience, which is great. But that also means they often have gray hair and maybe less energy than you need for developing a project. Like, how active is your board actually in that regard? Because I think this is a really important part.
Yeah, look, our board, there's definitely gray hair. I mean, I'm even sprouting a few. I mean, the one thing I can say in this business that I've definitely learned is experience is everything. It's not like some of the IT or some of these other sectors where you can be young and at the forefront of it. A lot of experience is needed in this business, and our board certainly doesn't lack any energy. They are very involved. We've got a really nicely balanced board across, the legal, financial, capital markets, governance, and technical capabilities. It's something we worked on. Well, when I came on board, we added two members to the board to balance that out, and we certainly look at every opportunity to get their wisdom and involvement in there, and they're certainly a great part of the team.
Fantastic. Actually, I want to drill down on the chat real quick, because there's been a small discussion here on YouTube, and it's more of a basic educational question, actually, which is quite interesting, because the question was, have you pulled out any gold? And then I followed up a bit, and it's like, hey, what do you mean actually by that? Like, they're not producing. And he's like, when you're drilling, don't you pull out chunks of gold? Right? Like, well, I wish it was awesome, but can you explain that process for us just real quick? Like, what is it actually drilling? What do you see? Like, visible gold, of course, would be awesome, but it's not common. Can you explain that process real quick? I think that'd be super helpful.
Yeah, sure. So it's called diamond drilling. The name's often a little bit misleading, but it's another name for it's core drilling. So you're essentially coring out some of the rocks by a diamond drill bit that spins, and you pull out, much like an apple corer. You pull out it's a rod-like piece of rock, and in that you start to you firstly log that, you look at the geology, the features, the veins. Sometimes you'll see bits of gold, visible gold. It's not often you see that in gold deposits, because you're looking at gold, grams per ton gold is the same as parts per million gold. So to actually see a flake of gold is quite rare. So if you do, it's exciting. If not necessarily always cause for concern yet. What you do is you'll take that piece of rock, you cut it normally in half with a core saw. That's normally done on site. Half of that goes to the laboratory where they crush it and they perform what's called an assay, and they actually give you a result in parts per million or gram per ton. And that's the basic process.
Yeah, it's just not common that you pull out big nuggets of gold or anything, unfortunately.
That would be nice, and that would certainly get shareholders excited.
Yeah. No, I appreciate that clarifying. I think it's also like we do have a bit of an educational job here as well. We're trying to help people understand our sector way better. So
Absolutely.
Fantastic. Thanks for asking that. Super. It was great, and hope we could clarify that. Let's go back to the drilling real quick, and I have one more question to follow up on the Goldfields drilling. It's like, what do you need to do to get to proven and probable to a proper reserve? Like, what kind of spacing are you looking at? How many meters do you expect to drill for that?
Yeah, so we've currently got 85% of our Goldfields resources are in the indicated category. So because they were indicated, that means you can actually start to look at an economic study like a PFS, where you can try convert those into reserves, proven or probable reserves. To get indicated mineral resources on our two deposits, you're looking at around 25-meter spacing, and for inferred around a 50-meter spacing. So with our drilling underway now, we're looking to expand these resources. We realize we're not going to get much from the market if we just infill and demonstrate more, or just confirm the results. We want to be able to show that there's more gold, and we believe we can do that. So we're stepping away from the known mineralization, and we're doing that around a 50-meter spacing. So we expect that would immediately start to give us inferred resources. And if those resources are good enough, we hope they are, we'll come back and then infill and convert those to indicated, which we can then take into proven or probable reserves as part of a study.
So pre-feasibility study is next, updating that. And in your presentation, you say pre-feas/PEA. Help me understand that part. Like, yeah. I think it has to do with drill spacing, I'm assuming, but and the quality of the resource, but you fill me in there.
It's not, for us, it's not really a function of drill spacing, because we've got a lot of indicated, there's enough to go on there for a PFS if we wanted to. Where the PEA comes in, and where our thinking is at the moment, and you'll see it in our latest corporate deck, is we take our new mineral resource estimate. We're doing some initial scoping around that. We're looking at these resource numbers in the resource model, and we're saying, what are the new opportunities for this project? We know what's been done in the past and how it's been done. We know it produced positive economics at a much lower gold price, but how do we make this project even better? And that's by looking at an early stage now, what are the opportunities? And then how do we move that forward into new studies? Now, some of the things we probably be looking at could be more conceptual in terms of some of the metallurgy. And because of that, it will be we may want to do a PEA before a PFS, just to show the potential, and before we spend more money on doing a PFS. You don't want to go down a PFS if you realize at the end of it, the results not as good as it could be for the project. So you want to identify those opportunities early on, test them through the initial study, and then advance it and gradually de-risk it while limiting your spend. We want to look after shareholder capital and dilution. And at the same time, we're going to look to do that as quickly as possible, so that this project doesn't drag on, but we're able to move it through toward a construction decision while this gold cycle is in play, and we believe it will be a sustainable one.
Yeah. Back in 2011, when you look at that PFS study, it wasn't the greatest study. I think it has a 19% IRR. Right?
That's right.
So what are some of the levers you want to pull in that regard that you can actually make this more worth everybody's time and while, of course?
Well, firstly, the resource model. We've straightened out the resource model. Secondly, the mining plan there, the waste stripping, there was too much waste stripping envisaged early on in mine life. We think we can defer some of that. Secondly, the cut-off grade strategy, it was a very fixed, rigid strategy. We think we can use a more optimal or dynamic strategy through that. The processing, historically, when this mine was in operation, they had a gold recovery of 94 to 96%. The 2011 PFS assumed recoveries of 91% at Box, 89% at Thona. Yet in 2015, Fortune Bay did some studies to show gold recovery could be increased to around 94, 95%, similar to the historical mining. We think that can be done, but there needs to be some additional work there. So that's something we'll be looking at closely, because gold recovery has a high sensitivity to project economics. And those are really the main things, we're going to be looking at as how we improve those to better this result. We think the gold price alone, the 2011 study was done at a 1250 Canadian per ounce gold price. We're sitting at around 2100 Canadian dollars per ounce. The gold price alone, the project, it will look better. but it's how do we make it better from a geological, technical development standpoint as well. And we're looking at all those levers, as you say, to find the best ones and then take it down that development path. And, those are just the technical aspects of this project. What I should point out as well is that this project has a power line to site. It's not active, but it's the same power line. It's a branch of the power line that currently feeds Uranium City with power, which is a mere 20 kilometers to the north. It's got a all year round gravel road that's maintained. It's got an airstrip at Uranium City. There's other facilities in the town of Uranium City. It was a historic mining hub. The project itself has a valid development permit. In other words, it has an approved environmental impact statement from 2008, and the 2011 PFS was actually done to conform to that approved EIS with a mill capacity of 5,000 tonne per day. So if we take our development forward within a similar scope, we can use an existing development permit. We know across Canada now to get a permit for mining can take many, many years. This puts us in a really advantageous position to be able to fast track things to construction with a project that's already had environmental screening and been approved.
Okay, fast tracking. What's the timeline overall, and then we can sort of put a bow around Goldfields?
Yeah, we haven't committed to a specific timeline because we do want to work out what our development path looks like. We know that the permitting side we don't think is the critical path. It's more the engineering, and that's potentially the permitting. We think within a year we can refresh our approvals. We're looking this year to certainly get through a PEA or PFS, or maybe early into next year, and then we could look to go toward a feasibility study after that. But no strict commitment on timeline yet, but that will be coming as we find our feature on what we'll be doing in terms of our next steps.
Fantastic. So drill results, when do we expect them?
Hopefully soon. They should be coming in. So keep a lookout on our news. We're on all the social channels, and in the next few weeks, I'm sure we can expect some results to be announced.
Fantastic. I don't think we've forgotten anything. That was quite comprehensive. Dale, it was great catching up with you.
I think that was everything. Yeah, Kai, thanks so much for having us.
Oh, I got to explain the title of the video real quick. Buy an ounce of gold for $9. And I realized that I put that in Canadian dollars, so it's probably $7 US an ounce. So everybody else do the math. Enterprise value is, what is it? It's a market cap is $26 million, 2.9 million ounces of gold over both projects. You do the math. So had to explain.
And just to add, even if you took our Mexican asset out of the company, our Goldfields project alone puts us at around $19 an ounce. And that's well below the average for gold explorers, developers in the Canadian space. So we are trading at a discount. We've been under the radar. We're getting ourselves out there. We're getting increasing visibility. So we're really excited about where we're going.
I think Fortuna Silva just bought Rox Gold for, was it $450 an ounce or something like that? So it was definitely in that region. So plus or minus $20, but in that area. So fantastic. Dale, it was great chatting with you. Thanks for coming on. And everybody else, thanks for watching. Thanks for tuning in. Thanks for your questions. It was great. Actually, we like mixing in the educational part as well. That's part of what we're trying to do. This is why we're doing it live. If you have a question, shoot it our way. We'll be happy to ask and answer it, of course, as well. Don't forget to follow us, subscribe to our channel, leave a link, or leave a like, leave a comment as well. Share it with your friends. It helps with the YouTube algorithm if you comment, and don't forget to turn on that bell notification as well. That way you get notified when we go live with another update. Thanks so much for joining us. We'll be back. It's already Thursday, if I remember.